We are just 3 months into the year 2021 and the markets have once again surged to all-time highs, with the S&P 500 in the US up 7% year to date, already producing its average yearly return within the first quarter of the year. At the same time, the Nasdaq index, composed primarily of tech-related businesses, is down almost 8% in the last 45 days. So in all likelihood, you are one of many investors right now scratching their heads and wondering, what is the best way to approach the markets for the remainder of the year? And it's in these times of uncertainty that it makes sense to take a look at how the biggest and most successful investors are allocating their money in the stock market. Thanks to DataRoma, I have a list of over 50 so-called super investors and what stocks make up their portfolios. These investors include Warren Buffett, Mohnish Pabrai, Seth Klarman, Michael Burry, and many more. And in today's video, we're going to be taking a look at the 10 stocks that make up the biggest percentage in these super investors' portfolios. So in other words, if we take an average of all of these investors' portfolios, which stocks are they the most confident in holding in 2021? So sit back and relax, and if you do get some value out of today's video, I would very much appreciate it if you could take the 2 seconds to leave a like on the video. And hey, if you get a ton of value out of today's video, consider hitting that subscribe button so you get updated when I post new content. But with that said, let's jump into the first stock. The first stock on today's list is Alphabet Incorporated under the ticker symbol GOOGL. Alphabet, of course, is the parent company of Google, which is the largest subsidiary, the largest part, and makes up the majority of Alphabet's core business. And Google, of course, that subsidiary of Alphabet, is responsible for running the largest digital advertising business in the world alongside Facebook, or just in front of Facebook, I should say, by providing digital advertisements to businesses, targeted advertisements on some of their free platforms, such as Google Search, YouTube, and some of their other platforms. In terms of the list of super investors that I have, 29 of them hold the ticker symbol GOOGL, and on average, out of all of those investors, it represents 1.2% of their overall portfolio. And it's no surprise that this is a very popular stock among the super investors. This business has performed incredibly well over the past decade. If we look at some of their core numbers, revenue and free cash flow, as well as their profits, have been driving growth at a compounded rate of about 20% over the past 10 years. And it is currently trading at a PE multiple of about 34, a price compared to their current earnings, which is considerably higher than the market average, indicating that investors are expecting substantial growth to come from the business over the following decade. Google, like some of the other businesses we're going to talk about in today's video, has a couple of classes of shares. The GOOGL shares, which we're talking about right now, represent the Class A shares, and why they're special, why they're called Class A shares, is because not only do you get 1 share of ownership, but you also get 1 share of voting power, which is pretty typical when you buy stocks, but for some businesses with multiple classes like Google, they have a class where you don't get voting power, and we'll actually be talking about that other class of Google stock a little bit later in today's video. In terms of the largest holder, Bill Nygren currently has 10.5% of his investment portfolio invested in Google. And interestingly enough, as you can see, most investors actually reduced their position in Google in the last quarter. Number 9 on today's list is the ticker symbol JOE, and it is St. Joe's Corporation. They are a land developer or a property developer, and they actually own the second most amount of land in Florida. So they are a massive company. The business partners with other businesses on a wide range of developments, from residential, retail, and even industrial. And even though this makes up the 9th most popular stock in terms of super investors, it's actually only invested in by a single investor who has a very significant position in it. That person is Bruce Berkowitz, who currently has 91% of his $1.2 billion portfolio invested in St. Joe's company. Berkowitz currently owns about 45% of St. Joe's, so not only is it a large part of his portfolio, but he actually is a very significant shareholder of the company itself. He sits on the board of directors, and how that all came about was in the GFC, St. Joe's suffered massive losses due to the housing collapse, and during the aftermath of that, Berkowitz was able to make a significant investment in the company and is, of course, on the board of directors and hoping to encourage some change in that business, or or has been over the past decade or so, and trying to rebuild that business and get it back to how great it was previously. Number 8 on today's list is the first financial institution that we're going to see here today, and that is Wells Fargo with the ticker symbol WFC. And this is one of the largest banks in the United States. It's actually the 4th largest bank by total assets. And this one is held by a large number of these super investors. So in total, there are 25 super investors who have positions in this business for an average of 1.3% of their portfolios. The biggest percentage is Charlie Munger, who currently has 38% of the Daily Journal portfolio invested in this company. And a little bit further down the list, you can see that 4th on the list is Michael Burry with 5% of his Scion Asset Management firm's assets invested in the company. Banking is one of those areas that is just well outside my personal circle of competence, and that is one of the key pillars when I'm analyzing businesses. Is I need to have a deep understanding of how the industry functions, and if you don't have that kind of understanding, then there is just going to be too much uncertainty for you to have a confidence in investing in that business and knowing how to manage that business as it fluctuates on the stock market over time. So this is one of those businesses that I will probably just never look into really at all. Number 7 on today's list is Microsoft Corporation, which is of course one of the most successful tech companies in the United States and the world of all time. It currently has a market capitalization of $1.8 trillion, making it one of few companies that have reached that 1 trillion market cap level. Microsoft is currently held by 23 super investors for an average of 1.5% of their overall portfolios. Chris Hohn has 10% of their $30 billion portfolio invested in it, meaning he has a $3 billion investment in Microsoft, which is massive. Terry Smith, following close behind, has 9% of their $30 billion portfolio invested in the company. And Microsoft in the past decade, as with many decades in the past as well, has been an absolute growth beast, continuing to compound their growth even as they become and have become such a massive company. Revenue has grown at about 9% compounded over the past 10 years. That's 9% per year. And free cash flow has grown at 7.4% compounded over that period. And similar to Google, it is currently priced with a price to earnings ratio of about 35, meaning that, again, similar to Google, investors are either expecting substantial growth in the future in order to justify that price, or investors believe that Microsoft is a very safe cash flow play, that it can deliver dividends and share repurchases, and people are just willing to pay a higher multiple and lock in a safer mid to high single digits return. Whichever one that is, I don't know. It's not a business that I've personally looked into investing just because it does have quite a high multiple, but certainly the business has performed very, very well in the past. With number 6 on today's list, we go back to Alphabet Incorporated again, and this time it is their Class C shares, which trade under the ticker symbol GOOG, which, as I mentioned earlier, the GOOGL is the shares that have 1 share of ownership as well as 1 share of voting. These shares are a little bit cheaper to purchase on the stock market, and they do not come with that voting share when you invest in the company. And since even these super investors, even though they're investing massive amounts of money, they are still going to be very, very minority shareholders and unlikely going to be able to use their votes, they are much more likely to go the cheaper route and invest in the GOOG shares, the Class C shares, and kind of forego that voting power in order to buy the stock at a lower price. The Class C shares for Alphabet have been held by 26 of the super investors for an average of 1.7% of their portfolios. And again, Chris Hohn has 17% of the $30 billion portfolio invested in this ticker symbol. Pat Dorsey has 11% of his $760 million fund. And Li Lu, which is a very, very successful Chinese investor, and Charlie Munger often talks about Li Lu as being the greatest investor from China, so he speaks very highly of him. He currently has 8% of his $2 billion fund invested in Alphabet. I won't spend too much time on Alphabet because we spoke a little bit about it in the previous ticker symbol, and we'll just move on to talk about number 5. But just before we do get into number 5, I need to announce that today's episode is sponsored by SHARESIGHT, which is a portfolio tracking software that I've personally been using to track my returns in the markets over the past 4 years. Using SHARESIGHT, you can track all of the different types of gains you experience as an investor, capital gains, dividends, currency gains, which is super important if you're investing internationally or you hold foreign currencies. Those can have a massive impact on your overall returns. ShareSight also generates up to 10 different reports that can be used for a variety of ways. Things such as doing your tax preparation, they can save you money at tax time. It allows you to track the performance of your shares over time, over any period, and other things such as diversification reporting and analysis. ShareSight has a ton of other features that are really valuable for investors, including benchmarking against a huge list of indices, so you can compare your performance against the broader market in the US, as well as some unique indices, whatever you kind of want to benchmark your portfolio against. And the best part is they have a free plan that you can use forever. So if you want to sign up, use the link down in the description below or head over to the link on screen, which is sharesight.com/Hamish Hodder. And if you use that link, as I said, you can sign up to a free plan and use it forever. Just try it out, try out some of the basic features. And if you then want to upgrade if you decide that you want to upgrade to a plan that has more features, then using that link, you can currently get 4 months free or 4 months off when you sign up to a yearly subscription. For those who have been following the channel for quite some time, you know that I don't really promote much on this channel except for my own stuff and ShareSight. And the reason why is because I only promote things that I think are really, really valuable, and also things that I use myself in order to better my investments, and ShareSight is one of those things. So I highly recommend you go check it out if you're interested. So moving on to number 5 on today's list, we have Berkshire Hathaway's Class A shares. Now, Berkshire Hathaway, as I'm sure you're aware, is the conglomerate of wholly owned businesses as well as a stock portfolio that is managed and controlled by Warren Buffett and Charlie Munger. There are 15 investors of the super investors that have an investment in Berkshire Hathaway for an average of 1.8% of their overall portfolios. Norbert Liu has 40% of their $300 million portfolio, which is kind of crazy, which means basically if you're investing $1 with this fund, then you're essentially investing 40 cents with Berkshire Hathaway. Francis Chow has 27% of his $130 million portfolio also invested in Berkshire Hathaway. For me personally, I'm not particularly interested in Berkshire Hathaway. I, of course, have the highest respect for Charlie Munger and Warren Buffett and what they've done over the past 40 or 50 years with Berkshire Hathaway. But at this point, they have so much capital to invest, and it gets very, very difficult to find investments when you have this amount of money to put into the markets, particularly with the types of deals that they're trying to find, where they're trying to invest a lot of money into a small number of businesses. When you're investing hundreds of billions of dollars, there's only so many businesses you can sort through, and it means it's very tricky to find undervalued businesses. Number 4 on today's list is Bank of America, which is of course another bank that I'm not particularly interested in. This one is held by 21 of the super investors for an average of 1.8% of their portfolios. Charlie Munger is again a big investor in this bank, as well as Wells Fargo, we spoke about earlier, with 56% of the Daily Journal's $125 million portfolio invested in Bank of America. Li Lu as well has 21% of their portfolio, and Guy Spier with 14% of the Aquamarine portfolio. At number 3, now we have Berkshire Hathaway's Class B shares. So Berkshire again is similar to Google in that they have multiple classes. Unlike Google, they don't split their classes based on voting power, but instead it's just the value of the shares. The Class A shares were the original shares, and they have never been split. So they have gotten very expensive. The cost of a Class A share at the moment is about $400,000. So investing in the Class B shares gives you a little bit more flexibility. The Class B shares currently run for about $250 a share. And Class B of Berkshire stock is held by 17 investors, and it averages 1.9% of their portfolios. Bill and Melinda Gates Foundation owns 44% of their $22 billion portfolio in this company. Number 2 on today's list is Micron, which is a computer memory and data storage producer. And this stock is incredibly volatile. It moves around a ton. It operates in a cyclical industry. And as a result, it attracts a lot of value investors who believe they can understand how the market cycles function and, of course, invest in the company when it's down, facing short-term problems, short-term headwinds, and then invest and then hold that business while it experiences its strong upward movements. This one is held by 11 investors on our list for an average of 2% of their overall portfolios. And there are some big names that hold this one. Mohnish Pabrai has 66% of his portfolio invested in MICRON. Li Lu has 47% of his portfolio. Spier at 9% of his portfolio. And Seth Klarman a little bit further down at 3.5% of his portfolio. MICRON operates in a very cyclical industry. The profits of the business go up, they go down. Sometimes they're actually losing money. Sometimes they're making a ton of money. So it is so important. It's important in every investment, but particularly in investments like this, that you understand how the industry cycles function. But over the past 5 years, it has been a very lucrative investment, generating returns of about 300% over that period. And number one on today's list might surprise you, but it is in fact Facebook stock, which of course, if you follow the channel, you would know that Facebook is one of my investments as well. And Facebook is of course the second competitor or the biggest competitor, I should say, to Google in the digital advertising space. And Facebook has been an absolute growth beast over the past 10 years. They have 50% 10-year compounded growth of free cash flow and 46% compounded growth in revenue. So they have been growing at a ridiculous rate. And this stock is owned by a lot of super investors. It's owned by 31 on our list for an average of just over 2% of their portfolios. Pat Dorsey has 22% of the portfolio invested in it. Li Lu has 14% of his portfolio invested in the company. And further down the list, you can see that Seth Klarman, who is a great value investor, has 2% of his portfolio invested in the company. Uncertainty around the FTC antitrust investigation and lawsuits has driven the stock sideways for about 7 months. And again, volatility in this stock is probably why a lot of investors have been attracted to it. Typically, as value investors, we're looking for really, really great companies with distinct competitive advantages, and we're looking to buy them when they face short-term problem. And Google has faced, it just so happens that Google has faced less short-term problems than Facebook has. Facebook has had quite a wild ride over the past 5 years, and those stock movements, the significant drops in the stock and significant increases in the stock, make it very, very attractive, especially if you can figure out when the business is going through a short-term problem and calculate the future cash flows and invest in the company while it's down and then hold it over the long term. If, like me, you like to see what these successful investors are looking into and then look into some of those businesses too, make sure you go through the list and select out the businesses that are in areas that you understand. There's no point looking into Facebook if you don't understand digital advertising, in the same way that there's no point for me to try and look into banking when I have zero understanding of how the banking and finance industry functions in terms of profitability and how that industry trends over time. There's no way that I'm just going to dive into it just because Charlie Munger's daily journal portfolio, for example, has a significant amount of investment in banking. So pick out the areas that you already have an understanding in, and that will be a very good starting place for you to dive into those businesses and maybe start to figure out what is it that these super investors see in some of these businesses. But with that said, I hope you guys got some value out of today's video. And as I said at the beginning, if you did, I would very much appreciate it if you could take the 2 seconds to leave a like on the video, and make sure you hit that subscribe button if you want to see more content like this in the future. And a big thank you to ShareSight for sponsoring today's video. As I said, if you want to try out a free plan, or if you want to try a premium plan and get 4 months off a yearly subscription, then check out the link down in the description below, or head over to sharesight.com/Hamish Hodder. And with that said, hope you guys have a great day. I'll see you in the next video.